Hey guys, what's up? This is Eddie coming before you today. So guys, today I wanted to do something a little special for my active buyers. So these are my buyers that are actively out there looking at homes. So I wanted to update you on what's going on in the market. Prayerfully, you guys have been watching my videos. I try to do a good job to keep you guys up to date on what we're seeing in the market as far as offers and what's being accepted, what's not being accepted, how things are looking as far as home sales, all of that. So prayerfully, you guys have been watching the videos. Hopefully you're subscribed to my YouTube page as well. But this is something additional that I wanted to do for my active buyers, all right? So as you guys know, I represent both buyers and sellers. So I get a lot of contracts that I receive when I'm working for the seller. So I kind of see what other buyers are doing. And I also write a lot of offers for my buyers as well. So I have a good feel on what's being accepted and what's not being accepted. So I want to make sure that you guys, truly understand what it takes, in this market to get your offer accepted. Did some recent videos, things you can do to make sure your offer is accepted, how to write a strong offer. So all of those are out there on YouTube, but this is going to be a specific session for you guys. I'm going to actually walk through a contract so you can fully understand what a winning offer looks like in today's real estate market. All right, so hold 1 second. I'm going to share my screen. Okay, guys, so of course, this is what a residential contract looks like. So this is the offer sheet that you will be signing when we submit offers. And most of you have already signed these. So it just has, the date, the buyer and the seller's name. We have the offering price. All right, so one of the things that I'm seeing that's working now and a tool that I like to utilize is called an escalation clause. All right, so for this home, the list price was 288,000. So you guys know that below asking price is not even an option, and pretty much at asking price is not an option either. Most homes are being sold from $5,000 to $15,000 above asking price. So what I've been utilizing, or the strategy I've been utilizing, is not going ahead and putting in the offer at your max amount, but escalating up to that amount. That has the potential to save you some money, just as it did with this buyer right here. So this buyer, we put in the offer at the list price, and then we're going to escalate up. So we'll see that a little later, how that works. Earnest money. So the gold standard these days is 1%. So if you purchase a $200,000 home, you may want to put down $2,000 in earnest money requirement. Now, you guys know earnest money is negotiable, right? So there's no mandatory amount, but I recommend putting 1% down. The very least that you should be doing or thinking about is, $1,000. All right, so that's your earnest money. Then we have the law firm. I'm only going to go through those essential elements of information on this video, not the whole contract. So we have the financing section 6. So the conventional loan is where it is today. Most sellers, that's what they prefer, conventional. Appraisal is very easy. They typically come in at value. They're typically as is, meaning the appraiser is not requesting any repairs or anything like that. So sellers like to see the conventional loan. Now, VA and FHA, it can be a little difficult, because there's some preconceived notions about the appraisal process. They're a little more stringent than conventional. So most sellers today are going to prefer conventional. So if you can go conventional, if that's feasible for you, you may want to strongly consider that. All right. And we actually have some sellers now on a listing sheet. They'll say no FHA, no VA. We're only accepting conventional and cash. So if you send me a home and you're approved with FHA or VA, and I come back and say, listen, the seller's not going to accept an offer with FHA or VA, that's why. They're actually saying that up front now. All right, so the next thing we have here is, one thing that I neglected to mention was right up here, we have our transaction cost. So this is where, back in the day, when sellers used to contribute to your closing costs, this is where you would put that. Right now, you're not going to get any seller concessions, nothing monetary. So the buyer is going to pay their own closing costs. The seller is going to pay their own closing costs. Now, we do have some buyers, they've gotten so savvy now to where they're offering to pay a portion of the seller's closing costs. So that is happening. That's just one way to get a leg up. Not what I'm recommending, but if you want the strongest possible offer, you could consider that, depending upon your situation. All right, so let's talk about the closing time frame. You guys know that most loans close within 30 days if they're a good lender, up to 45 days, depending on, extenuating circumstances. So most sellers want to close as quickly as possible. They want to get it over with. So if we can close quicker, that's going to be a leg up for you guys. So a lot of lenders nowadays are doing what's called advanced underwriting approvals. That means they'll go ahead and take all of your paperwork, go ahead and send it to the underwriter. The underwriter will review it, give you that advanced underwriting approval. So now you're just sitting back waiting on the home. So once you get the contract, you send in the address and they start the title work and you can close within 2 weeks. So that will definitely, be a benefit if you can do that. So one of the actions that I want you guys to do is to reach out to your loan officer to see if you can go ahead and do an advanced underwriting approval, because that will help. Everything helps in this market. All right. So next we're going to talk about property as is. Now, the market is kind of shifting. I never, recommended doing an as is contract. But now this is what's winning offers these days. So there are two options here. So there's an as is with due diligence and an as is without due diligence. And as is with due diligence is saying that, listen, I'm not going to ask the seller to make any repairs, but I do want a period to have some inspections. And then you have the as is with no due diligence. That means I'm not going to ask the seller to make any repairs. I'm not going to even have any inspections. I just want to move forward with the home close. All right. So there's a risk associated with both of these. Now, with the first one, with your due diligence period, the inspections are just to, for you to decide if you're comfortable moving forward or not. With the second one, you're moving forward without even having any inspections. So if you put your seller's hat on, you have a buyer that's saying they're going to have a due diligence period, and then you have one saying, listen, I don't even want one. Which one are you going to choose? Obviously, you're going to choose the one that they're not even going to bother to have inspections. Inspections make sellers, a little nervous because they don't know what they don't know, right? So obviously, if you do that second option, they're going to look more favorable upon that. I don't recommend that second option. I mean, maybe if you have a home that, it was just built 2 years ago, the risk is, very minimal because it's still going to be under warranty for most things. But I'm just a little leery about not having any inspections. But buyers are doing that nowadays, and these offers are the ones that are winning. So at the very least, I would strongly consider as is with a due diligence period. Home warranties, that's a seller concession. It's not going to happen. Sellers not paying for home warranties these days unless you add it on, unless they agree for it to be added on to the purchase price, which they don't want to do that as well because they know it may not appraise and they still going to have to pay for that home warranty. Now there is an option on there for the buyer to pay for the home warranty, so we could write that in, or you can just get that after closing if that's what you want. All right, so the next thing is section 18. So that's when we write in different things. So if we're requesting a refrigerator, we'll write it in here. But this is also where we put in the escalation clause. So this escalation clause, this buyer, remember we put in the offer at 288, but his max was 310,000. So he said, listen, I'm comfortable paying up to $310,000 for this home. I think it's worth that much, and I'm okay with that. So we decided, well, we're not just going to go in at 310,000. We're going to go in at the asking price, but we'll escalate up to 310. So if someone comes in with a 295, then our offer will go up to 296. If they come in at a 300, ours will go at 301, and so forth until you get to 310. Now, once you get 310, he said he's not comfortable going above that. So if someone comes in above that, then we're just out. But that's how the escalation clause works. So remember, $5,000 to $15,000 is what we're seeing for most homes are going above ask price. So if you have that max out there that you're willing to spend, but you don't want to go in at that max, then we need to do an escalation clause. And that's kind of what that looks like. Now, we also have the appraisal gap contingency. So this is becoming more and more, a staple of most contracts. Sellers are actually asking for it now. And what this means is if the home does not appraise, let's just say this offer is 310, it goes up to 310, but the home comes in, it appraises for 305. So the bank is saying, listen, we're gonna give you 305,000 now. The other 5 is up to you. So when you put this appraisal gap contingency in here, depending upon the monetary amount that you have on it, then that means that you're agreeing to pay a certain amount over what the bank is going to pay you. So if the bank pays you 305 and you have a $5,000 appraisal gap, that means you're going to bring in that 5,000 from your bank account, and that's going to bring the offer back up to 310. That's what an appraisal gap is. Now, this buyer, he was willing to pay 15,000 above what the bank gave him. Now, praise be to God, the home appraised, the actual winning price was, I think it was 299. So the highest offer was 298. So our offer kicked in to 299. He won that, and then the home appraised for 300,000. So he didn't have to spend all of his 310. So he saved $10,000 there, and the home appraised, so he didn't have to bring any money above what the bank is paying. So he had that $15,000 in there, but he didn't have to spend it. So that's the best case scenario. Now, if you put it in there, you might as well assume that you're gonna have to spend it. So you don't want to take a risk in putting it in there, thinking that it's not gonna happen, because when you do that, it'll happen. But that's kind of how the appraisal gap contingency works. So that's kind of what's winning offers. These days, it's the escalation clauses, it's the appraisal gap contingencies, it's the as is offers right now. That's what's winning, and the quick closes. So remember, your homework today is to reach out to your loan officer to see if they are willing to do an advanced underwriting approval for you. Go ahead and consider what you can do as far as an escalation clause and an appraisal gap contingency. Now, let me say this. If you don't feel comfortable doing any of this, then don't do it. Listen, I don't recommend you doing anything that you're not comfortable with. It just may not be for you, and that's okay. And your situation, depending on your situation, you may not be in a position to do it, and that's cool too. But it's my job to educate you on what's being accepted and what's not being accepted, just so that you're armed with that information so you can make the best decision for you, and then let the chips fall where they may. All right. So if you guys want to reach out to me to do an individual assessment for you and what you can and cannot do, what you're willing and what you're not willing to do, we can do that as well. But I just wanted to arm you guys with the information going forward. All right. If you have any questions, please reach out to me. But just wanted to update you with this critical information that you're going to need in order to make your home ownership dreams come true. All right. I'll talk to you guys soon. Hope y'all have a blessed day today. Y'all take care. All right. Bye.